Following Bitcoin's ETF approvals, we're starting to see some signs that Bitcoin is trading more and more like traditional assets. So are we likely to see this correlation continue, or is a BTC decoupling still a possibility? Today we're going to be looking at if we can expect to see Bitcoin to start trading more and more like traditional assets. And I think the best place to start for this is the S&P 500 versus BTC correlation. And especially if we just zoom in on a most recent time period here, we can see that over the past few months, Bitcoin and the correlation between the S&P 500, or how in tune their movements are to the upside and the downside, has begun to increase quite noticeably, especially over the past few weeks. And this is a bit of a change in trend really, because over the past few months and quite a bit of last year actually, there was actually a negative correlation, which indicated that Bitcoin was actually trading less and less like the S&P 500. In fact, they were trading in opposite directions for a lot of the time. Whereas since the ETF approval, this has actually trended very much to the upside. And this may be due to the fact that as more institutional capital's coming in, the volatility is decreasing a little bit due to the increased market cap. If we just look at something like the MVRVZ score here, I'm just going to actually remove a lot of this so we can focus on the Bitcoin market cap. Because we can see in every cycle, we've gone from 100 million at the peak to a billion at the peak to 10 to 100 billion to in the most recent bull cycle, reaching a peak of around $1 trillion. So maybe in a factor of 10, we're going to reach $10 trillion this cycle, which would be pretty amazing. But ultimately, this is requiring more and more capital inflows every single time, because the amount of money just required to move Bitcoin at $100 million compared to $1 trillion is substantially more. And we can see this reflected in the long-term volatility trend of Bitcoin. If we just remove a lot of the shorter-term metrics here, we can see that even though Bitcoin has had quite a radical price increase after a radical price decrease in the past few years, the long-term trend in volatility is beginning to decrease quite substantially. And especially if we look at some of the more short-term ones as well, we can see that even though there are spikes to the upside, of course, the spikes just aren't as volatile. The volatile spikes are having less high peaks and lower troughs because, like we said, just generally as the market cap increases, as the market matures, it becomes less speculative. It becomes more like a traditional asset. And if we go back to the correlation to the S&P 500 and just zoom out a little bit here, we can see that this isn't actually a new phenomenon. We can see that over time, Bitcoin's correlation has actually always been quite strong with the S&P 500. And actually on a longer time frame, this has actually been decreasing a little bit. So it's actually only very recently that we've begun to see this trend pretty much have a big reversal to the upside, where we're seeing more and more correlation. And it makes sense if lots of institutional, sophisticated investors are coming into the market through these ETFs. They probably don't want huge volatile moves to the upside and the downside. And especially if more and more capital is coming into play during regular trading hours, Monday to Friday, 9 till 5, if that's when a huge portion of the Bitcoin trading capital is actually inflowing into the market, then again, that's probably going to be quite correlated to assets that only trade during those hours, like the S&P 500. However, there is still a chance of a decoupling, even though we are seeing some signs that the correlation is beginning to increase. If we just take into account the long-term hold supply of BTC and how this is continuing to increase at a massive, massive rate, at some point there is going to be a point in time where such a small portion of capital is available for trading in the Bitcoin markets, because the rest is just being held by people with a very much long time frame horizon with their BTC investments, that the amount of capital required inflows to actually increase the market cap reduces quite significantly. So even though we're seeing the market cap increase 10 times every single cycle, and that requires significantly more capital to move the markets to the upside or the downside, at some point the amount of inflows required begins to actually decrease very rapidly, just because there's not enough BTC available to buy. And especially with this ETF, if we begin to see demand continue to increase, along with the decreasing supply, just in time with the halving event scheduled just a few weeks away, which will see the Bitcoin inflation rate decrease to lower than that of gold's. This is only going to have a very positive impact on price. So potentially this is where the decoupling comes from, not necessarily the hedge narrative, not necessarily the 24/7 trading hours, but just due to the supply and demand economics of the built-in Bitcoin network. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on lookintobitcoin.com, your #1 source for Bitcoin information. So just to summarize, with Bitcoin ETF approvals and institutional capital inflows, we may be beginning to see Bitcoin trade more and more like traditional markets and become more and more correlated specifically to US equities. And given the capital required to move an ever increasing market cap, it's less likely that retail traders will be able to have a noticeable impact on Bitcoin prices. If you just look to a few years ago, retail traders combined could have put their money in, and when the market cap was only a few $1 million, have had a pretty significant impact on price. This is where we saw the volatile swings of 50,000% to the upside and 90% to the downside. Whereas these are coming in a little bit now. We're not seeing quite as radical increases, but also at the same time, we're not seeing quite as many stark downside moves in Bitcoin. However, given BTC's growing illiquidity and the fact that it is 24/7 accessible and always will be, there is still the opportunity for a prolonged decoupling. The amount of capital inflows required when the market cap is increasing doesn't necessarily correlate 100% given the fact that the supply has decreased massively and the fact that Bitcoin will always be a 24/7 asset that cannot be turned off. It's not necessarily going to be tied one-to-one with US equities because even though a huge amount of capital inflows will be coming in during those regular trading hours, once there's ETFs available in every nation around the world, Bitcoin's a 24/7 asset and it's going to be traded like a 24/7 asset, like a currency that isn't restricted by the trading hours of one country. So there is, of course, still the chance for a decoupling. However, looking at the short-term correlations, we are seeing this increase. So we'd need to see a prolonged decorrelated period to really sense that a decoupling is imminent. If you liked this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto interview reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on potentially Bitcoin becoming more and more correlated to traditional markets, and specifically US equity indexes like the S&P 500. Do you think that correlation is likely to continue or even increase? Or do you think a decoupling is still on the cards and Bitcoin will shift away and have this hedge narrative asset that doesn't necessarily correlate to any traditional markets? As I said, let me know down in the comments below and on social media. I look forward to reading and replying to all of them. Thank you all very much for watching, and I'll see you in the next one.